You're looking at a daily chart of the Nasdaq, which was kind of going sideways here. It was down 0.007% today, down 10 points and closed at 14,241. I'm laughing because it was up 0.007 a couple times last week, and it started a James Bond. There it was on the 16th. It was up 0.007 and then 0.008. So it was the 15th 0.007, the 16th 0.007, the 17th 0.008, and today it was up down 10 points or 0.007. So we're going to take a look at, the point is it's trading tight, and if you would take a look at the weekly here, you know, we had this nice rally, but seriously, the high there was 14,125. Last week it closed at 14,250. So if it stays within, you know, a range of, you know, 200, 250 and closes there, you're looking at a 3 weeks tight pattern. That's really a bullish pattern. After big gains, you trade sideways, stay tight. It just shows that, you know, there's not, sellers aren't willing to sell at this point, and buyers are likely to come back in. So if we have a week of sideways action, I would be thrilled with that. And on the daily, it's as I go back to the daily chart now, it's 5.8% above its 50. So we're still on the power trend, just kind of trading sideways, digesting these big gains. Very bullish action, in my humble opinion. The volume on the downside is less than the volume on the upside. Not that I'm a big volumeologist or anything like that, but just something to note. Anyway, I'm going to try to be a little shorter today. My video's been going kind of long, but I do want to cover the Mag 7. And this is Apple. It's on our watch list. I'd like to see it pull back here, at least to the 10 or below, and just kind of shake some people out. But this is setting up in a nice base. There you can see the cup shape pattern. The weekly chart shows there 18 weeks, you know, of a base there for Apple. So this is looking very constructive. I'm liking Apple. Microsoft, I'm wanting this thing to pull back, and it just won't. You know, you can't always get what you want, as Mick Jagger's saying, but I would really want this thing to pull back hard and just shake some people out. I thought we were going to get it when the OpenAI Sam Altman drama occurred last week, but it just pulled back one day, and it just doesn't, it refuses to go lower. And it actually made a new high today there. So if you look at the weekly here, there's this nice cup there, 16 weeks, and just trading higher every week with volume. Microsoft is just being bought. It's being bought. Institutions are supporting it. They want it. That's not Aunt Sally buying. And, you know, sometimes you can see it's in a power trend here, and sometimes you just got to hold your nose and get in if you want to own the stock, because this one just might not pull back and give you an easy entry to get into it. Anyway, Meta had some news today, something about Reels on Instagram. I don't know. To me, it's, you know, noise, and it just pulled back to its 10. Probably an opportunity there. 334 close. It was down to 334.20, so it closed near the lows of its days, but pretty tight trading here for Meta Platforms. And I just would just kind of disregard whatever, something about Reels, I forget. It doesn't really matter. It's not going to have a profound effect on the company at all. Google looks good again. You know, shaping up in this base here, pulled back the last couple of days, but still can't even trade down to this 10 EMA, 135.56. I'm telling you, it's still above it by like a buck. The mega cap, you know, the Magnificent Seven or whatever, they're just being bought. They refuse to go lower. So it's acting like a safe haven is what they're doing. Amazon was up on the good news from the weekend, the holiday shopper, Black Friday, Cyber Monday. The consumer was supposed to be dead. A recession was supposed to be here 18 months ago, and we've been hearing about it forever and ever. But the consumer seems to be strong. All data suggests. And, you know, Amazon's not really, you know, just a retail play. It's obviously one of the artificial intelligence leaders in the Amazon Web Services business is, you know, that's their bread and butter. Their margins are razor thin on their retail stuff. But anyway, definitely good news over the weekend that there was people shopping and the consumer is strong. And there was a lot of retail stocks that were higher. I'm going to get to that in a minute. But I want to close out the Magnificent Seven with these last two. Tesla, this is looking good to me. This is looking very constructive. Could show up on our ready list here pretty soon. This thing's flagging in here right at the 50. Yeah, I like that action here. I'd like it better if it got above the 50 with some conviction, you know, but Tesla's definitely one to watch here. NVIDIA, same thing. This is not the same pattern, but it's definitely one to watch as it's forming this bull wedge here. You know, after this double bottom base, it's got the double bottom. You can see it's pretty pronounced here. And now forms this little wedge pattern. This looks really good to me. I mean, a $1.2 trillion company delivering, you know, sales and earnings growth like this is insane. They're going to run into tough comps in about 3 quarters, you know, when they have the 13.5, but these next 2 quarters are going to be crushed, blowout. They've already guided to what, 20 billion next quarter. And so it's going to be easily another triple-digit quarter for this thing. But, you know, that's all priced in. We all know that. It's just where's the stock going to go from here? And technically, this is set up in a double bottom base pattern with this bull wedge. I like it. And I would like it much more if it got above 502, but just give it some time. NVIDIA looks good. And since I'm talking about the semiconductors, I'm going to stay there and go to AMD. Is another pattern that I really like. This is on our ready list now. As you can see, it's completing the right side of this base here, cup-shaped pattern. It's been consolidating for 24 weeks, so it's nearly half a year here since it made that 132. I like it. You know, I like it when it broke above its downtrend line. Did I buy it? No, I didn't. Why? Because I'm a moron. But you know, that stuff happens. You can see that it's trending now, and it might just, you know, once again be like you know, Mick Jagger saying we don't always get what we want. I would like to see it pull back, but it just might just trend higher and just keep going higher. So yeah, you can't sit there and wait for a pullback. I mean, you can, but you might not get it, is the point. And if you really want something, sometimes you just got to hold your nose and dig in. So anyway, AVGO, Broadcom, you know, they confirmed the VMware deal, I guess in Europe last week, down on big volume today. But just pulled back, you know, it's beneath its 10. It's still well above its 21. That one looks good. RMBS is another one that I like on our ready list there. You can see it's just trading sideways, starting to form that little wedge pattern that, you know, pinching in on the daily, on the weekly. You can see this big consolidation. You know, 25 weeks, a half a year of consolidation here for RMBS. So those are some of the semiconductor stocks that I like. This one as well. Microchip, not as much, but you know, it's definitely consolidated here and now pulling back. So this is what I like, pull back as the volume dries up. So Microchip is another one that I like. Anyway, let's move on. I wanted to talk about some of the retail stocks. And Affirm, you know, we had this, I caught it too late over the weekend. And, you know, then the news came out, then it shot higher, and you can't chase that stuff. But it had a nice day, up 12%. And, you know, that thing's just gone. Yeah, that's where you have to show discipline and just say, I saw it, I noticed it, I didn't act on it, but, you know, you had the right call, you had the right pattern. He just didn't pull the trigger. So that's the way it goes. You move on to the next one. Deckers is one that I really like. And it just formed this shelf pattern. I've been talking about this. It pulled back that one day on a downgrade, you know, yeah, right. Downgrade with a higher price target. And it shook some people out, but it just went immediately. It went back higher and made new highs. And today made another new all-time high. And that's why these downgrades are, you know, there's a lot of shenanigans going on Wall Street. They downgrade the stock and retail people sell and they buy. So, yeah, you got to be mindful of that. But anyway, Deckers, once again, this is why we pay attention to breakouts. breakouts only work in certain markets. They are working in this market because the market is in an uptrend. But if you only trade breakouts, you're only going to be successful a certain amount of the time. And that's why you need to know other strategies to be successful and other types of markets. So breakouts are working now. So we pay attention to these earnings breakouts where it's up 19% and just trading higher. There's quite a few stocks like that. So that's very positive, very bullish. And it tells me that, it's okay to buy breakouts because they're working now. Last year they weren't, but this year they are. So ELF, this one is just consolidating in a base. We had it on our ready list last week at that 112.47 level, which looks good to me. But it's just, forming a base. It traded below its 200, rallied back through the 200, the 50. You could see the 10 and the 21 have now traded through the 50 and trending higher. That looks pretty good to me. Wing is another one. Looks very good. You can see the long consolidation. I got to look at the weekly on this one. Yeah, look at this big base, 27 weeks. So these things have been consolidating for half a year now. They're starting to move out as the market, improves. And wow, this one had a nice bullish engulfing candle today, up 2%, and closed near the highs. That looks really good for a wing stop. I just wrote it down. Well, it's on. Should be on our ready list, but it's extended now. Yeah, close at 90% of the daily range. That's a nice hammer on Wingstop. ANF. Now I like this one. It's starting to look a little bit like Deckers, and they have earnings behind them, but you could see these highs here just consolidating, forming this little shelf here. Made a new high today, is up 4%. ANF looks good, and AEO, American Eagle Outfitters, sold off on earnings. Look at that. And now it's starting to climb back above its 50. So it's definitely one to watch here. Nice volume today on American Eagle. Anyway, there's a lot of retail, but I'm going to stop right there because I want to keep it somewhat condensed. I'll get to the drug stocks. Lilly, this is one of my favorite chart patterns right here. It's why? Well, because it's shown the ability to have a prior uptrend. It's had a nice uptrend, right? And then it just consolidated sideways. And it's in a trade range, but it's just going sideways. The volume is drying up. It's above its 21. It's really just trending along this 21 and finding support right there, making higher lows. Really like Eli Lilly here. I don't know if it's going to break out tomorrow, the next day, next week, but at some point I would just say that I like the chart pattern. I'm not going to make predictions. I like the chart pattern with Eli Lilly. Novo Nordisk made a new high on Friday. Like I said, this thing's a little gappy. Trades overseas, ADR, and it traded open lower this morning, just stayed lower. And you can see how tight these daily bars are. If you just look, throughout the history of this year, the bars are really tight. It's not a real wild trader. Usually just opens and then stays within 1 or 2% of its opening price. So it's not a real big mover. So yeah, not a day trader stock, just one to hold. I got to go through the software stocks. I like Palantir. It's traded down 4 days in a row here at the 21, finding support, shaking people out. People get bored with it, like, oh my God, this thing's not going anywhere. I'm going to get rid of it. And then as soon as you turn away, then it's going to ramp higher. Definitely like that chart pattern there. Consolidating in a stage 2 base for 14 weeks. That's significant, more than 3 months of consolidation. So another one I like is Cloudflare. Net, these guys have the sales and the earnings growth. They're, like I say, the chart's not going to go up because of the stock's not going to go up because of the chart. These guys have delivered, 30% sales growth, 3 quarters in a row, triple-digit earnings growth, and it's set up in a baser. Like to see a pullback to that 10 EMA, but this thing, like Tom Petty saying, won't back down. Like Microsoft, it just stays up there, and maybe one day it'll pull back, and you're gonna have to jump on it quick. Shopify was one that was up today. along with the retail data. This thing moved nicely. It's got this double bottom base pattern. We had this on our ready list, and once again, this thing took off. I got to go to the 5-minute chart because some people were asking me about this. The opening bar, and then it showed your daily range, and then once it got above, that's a nice trade, right? Above the bar. Here, it went above the bar and then traded to here, and there's your trade. It's a 20-minute trade, and then it came back to that level, but then traded higher. So, I don't hang on that long if I'm day trading. That's it. 20-minute move, boom. And if you're playing options, that's all you need. Anyway, Shopify looked good. Datadog is another one that I like. I didn't put the chart up, I don't think, on the site, but I'm going to have to do that. Nice consolidation there, 65 weeks or more. This one, the bigger the base, the higher in space. And this one was 120.75 back in August of 2022. So it's been more than 65 weeks. Nice handle pattern here. This is what you like to see, these shakeouts, man. Get these people out of here. All the weak hands, those with no conviction, trades higher with the earnings, gaps higher, I believe. I forget the percentage. Come on, Marty. Yeah, it gapped higher on November 7th, 28%, not bad. And just see what I'm saying, these earnings gaps are working. So that's a bullish sign for the market overall. Anyway, that's it for me today, except for I lied. I have a couple more things. I wanted to show you some stocks that were on our ready list that are doing well. I'm not going to spend a lot of time on them because I've explained them at the site. This is ROKU. I believe it'll probably have trouble with 100, at that 100 level. We'll see if it can blast through there. This one still looks good. Nice pattern. STNE, a lot of the South American stocks are doing well. This one's set up in a base. It's a little extended here. Actually, it's quite a bit extended. You see the big heavy volume coming in. So waiting for a pullback there. Some of the home builders still look good. Pulte, cup with handle. See, that's looking like Deckers there, just forming that shelf. DHI. These things are tethered to the rates, and the rates have been going down. They were down again today. So you can see this little wedge pattern. I like that. DHI. Just got to be patient with them. Those things are not fast moving. They require more patience. SMCI is not, it is a fast moving stock. It's not slow moving. Double bottom base. I like it. It's got to prove itself above 300 for me. I'm not touching this thing until it has some conviction above 300. But I do like the chart pattern. It looks good. Arista Networks, I believe it made a new high today, or at least close. That one's extended and gone, but it looks good. One of our leading stocks. So our leading stocks and our ready list stocks are doing extremely well. Here's another one with the earnings gap and just continue higher. That's Duolingo, and then Spotify, once again, trending. And just like Tom Petty saying, won't back down. It's just going higher. So if you want to buy Spotify, what do? Wait till it comes to its 10. I mean, if you want to own it, buy a little, wait for it to come down, buy more. I mean, that's very difficult for me, as a trader, because as soon as I buy it, it's going to pull back to the 21. I'm going to get shaken out, down 5%. It's adios, muchachos. So very difficult for me, and I do not own Spotify. So good luck with that one. And anyway, that is it for tonight, except for one more thing. I lied. In honor of the great Steve Jobs, I've got to go through the Zscaler earnings report today. It was just stellar. I expected it to pull back because it's making new highs here prior to the report. So they reported an outstanding report, and what happened? They sell the news, and it's down more than 7% on a beat and raise. I mean, they beat handily on earnings and revenues, raised guidance, and reaffirmed their billings, which is something that Palo Alto couldn't do. So it was a better report than Palo Alto, selling off just like it, though. And I think this provides an opportunity. One area of interest for me is that 177.69 area, and also that 178.94, that gap there. So that is an area of interest. Tomorrow, if it comes down below 178, I may be pulling the trigger here on this one. That's a heck of a sell-off on a stellar report, but that's what happens. You sell the news, people take profits, maybe the short sellers come in, it's too high, and then That allows new buyers to come in and buy the stock. The pullback in after hours action coincides with that 21 EMA 179.79. So it's right about there. So maybe a bounce off the 21 tomorrow. Just something to watch for. I'm not saying buy it, but it's definitely something to watch for. And it's just a sell the news event. That's all it is. There's nothing wrong with the quarter. It's just selling off because it made a new high and people are taking profits. And I did mention Palo Alto Networks. They reported, and then what happened? This day it came down, what, 5.5%? And then what happened after that? It ran right back up, made a new high, so you just got to be patient. I would imagine that Zscaler would do something similar. I'm not saying make a new high by this week, but maybe next week, to pull back here and then reestablish, itself, and then stabilize and then trade higher. So it's definitely one that I'm watching. CrowdStrike is in the same cybersecurity business. They report tomorrow, down $2 after hours. I would imagine it would do the same thing. So what are we looking for with CrowdStrike tomorrow if they sell off after hours? That 198 looks interesting, as that is the 21 and also the 191 area. And I had to trim this because, like, if you own 100 shares and you sell 50, take profits, raise your stops, guarantee yourself a win, but you can always buy it back. If it really sells off and you want to own the stock, you can always buy it back. So anyway, they report tomorrow after the bell. That's it for me tonight at mcstockcharts.com. We never give up. Thank you for watching.